What's up, y'all? This is Cole, Free Trading Academy. We are back. We're talking how to spot changes in an overall trend. All right. So if you have looked at any chart, US 30, S&P 500, I have a gold chart pulled up. You'll notice that there are times when price just goes on these nice trends. Okay. Uptrend, downtrend. A lot of people make money. It's easy to trade. You just wait for the pullback. Break of support, retest, you enter, just like we talked about in our previous videos. But there obviously are times, right, when these trends come to an end. And it is not good to be getting in at the end of the trend. You want to wait for the trend to be established before you add positions and start trading. All right, so quick things in this video. We're going to try and keep it short. You'll notice this is a great example right here. This is gold US dollar. You'll notice here gold is coming in. This is the 4-hour chart, by the way. So this is a nice long trend we're looking at. Nice long bearish trend. Okay, at the bottom, which is always what happens. Trends normally just don't reverse. We call that a V formation. That rarely happens. Usually there's some consolidation. All right, buyers and sellers exchanging hands, and then price begins to take off. So we see here after this area is broken, right, price kind of is hovering around this zone here, breaks it, retests, and now we're making our first wave. You get a pullback, second wave, pullback, third wave, pullback, and then things start to get interesting. All right, so I'm never going to speak in absolutes when I'm teaching my traders how to trade and teaching in these videos. So I'm never going to say after 3 waves, then you're automatically going to get a reversal. After 4 waves, the market just doesn't work like that. If anybody tells you otherwise, and they're lying to you. So sometimes it's 3 waves, sometimes it's 4 waves, sometimes it's 2 waves, right? Sometimes trends are pretty short and then they reverse. But generally speaking, after the 3rd wave, you should be on high alert. That means that, especially if you're looking at a high time frame, such as a 4-hour, you should be on high alert, because that means that this trend has been going on for quite a while. So let's take a look. When it gets to the very top, we're at May 30th. Okay, first wave, you're at April 16th. All right, so a month and a half of this uptrend. Chances are high that it's about time to reverse. Okay, so that's the first key. After the 3rd wave, be on high alert. All right, this doesn't mean that you're automatically shorting here. This is just an additional confirmation as you're putting that together with your supply and demand zones, your trading channels, other indicators we've talked about in this course. You're looking at the whole picture, and then you're making a decision. Second, as price after the 3rd wave, you notice that this trend has been exhausted a bit. We're looking at our zones here. What happened the last time price traded in this area? So in order to do that, we look to our left. I'm going to scroll out a little bit. All right. So we see that the last time price was in this zone, there was a fresh supply zone that was created. So we had a little bit of liquidity grabs here, sellers coming up to grab some sell orders, some institutional money hanging out here, and then price aggressively dropped. It has not traded at this level since January 6th. Okay, so now we're talking all the way back. We're now in May. Okay, and prices finally got back to the supply level that was created back in January. Okay, so for me, I am on extreme high alert. The last thing I'm looking for are candlestick patterns now. I know that the trend has been exhausted. We've had a month and a half's time worth of buying power in the market. So we know that sellers at some point are ready to step in. They're just waiting on the right time to do so. We also know now that price hasn't tested this supply zone since January. Okay. So this is what we would call a fresh supply zone. So now we're just looking for patterns. All right. We're looking for patterns, something that will tell us that the trend is officially exhausted and we are now looking to short. Okay. So for me, I'm looking at a double top, a triple top. Very rarely, especially after a trend of this length, will price just turn around and go in the opposite direction. Okay, certain pairs maybe, if you're trading US 30, GBP, JPY, occasionally those pairs will turn around and run away from you. But in most cases, you're going to have some fighting up here at the top because the buyers want this to keep going. Keep in mind, there are billion-dollar hedge funds that place orders down here, orders down here. So they would like this trend to keep going as high as they can. There are other billion-dollar hedge funds, though, that are waiting up here to sell. So they're trying to make money too. So there's always going to be a fight. Don't be too eager and short on the first bearish candle you see because you're going to get stopped out, just like we talked about last video with the fake outs. Always be patient. All right. So we see a double top forming here. I'd like to wait and see. I'd like to wait for this level to be broken. This little zone, this little mini range up here at the top. Okay, so I mean, it would have been tempting to get in here, but we're still not. We haven't had a close outside of this range yet. The structure hasn't been broken yet, so that's not a valid entry. Good thing we didn't get in, right? Because now we see momentum back to the upside. All right. And then now we have momentum to the downside. So after this third failed push, I'm looking to sell. If you could be aggressive, you could sell on this candle here. You see, we have an official break and we get a retest. So you could wait for that as well. So you really have a couple of entries. You could enter on the break or on the retest. Again, it's always safer to enter on the retest, especially if you're trading gold. Gold loves to respect the technicals, so more than likely it's going to come on back. All right, so that is a quick hitter on how to spot the change in trend. Last point I want to make is divergence. So a point about this again is not the end all be all. There are people who have scanners and complete strategies built around just trading RSI, stochastics, MACD divergence. For me, that's not enough. I need more. I need more confirmations. But again, having all this information at our disposal, now we look at our momentum indicator and we see that this peak created. So the second peak here on the actual chart technically is a slightly higher high, but look at the momentum on the RSI. Momentum is falling dramatically. All right. Again, our third peak, momentum is falling even more. So we know that sellers are taking control, buyers are losing momentum in this exchange here. So that's just the last bit of confirmation that we need to be able to take our sells. You could, again, enter here, enter a second time on the retest, enter a third time as price keeps retesting, and just let it go. So a lot of great trading opportunities at the top of a trend, at the bottom of a trend. The biggest thing is wait for the confirmations, guys. Don't just get in on the first bearish candle. Don't get in because you see some divergence somewhere or because you're counting waves and you think that eventually it's going to turn. That's all guessing. That's gambling. All right. We're teaching you how to make consistent profits on a daily basis in these markets. Okay. So stay tuned. Go back, as I always say at the end of each video, please go back and back test, do your homework. This is all about practice and discipline, guys. All right. Peace. Take care. See you in the next video.